To trade or not to trade? This is the question. I decided to do this video to give you guys a little bit of tips on how I'm able to kind of have my little spider senses to when it's time to take a trade. Oftentimes, when I'm navigating through the trading chat or the technical chat, I see a lot of similar names coming back when it comes down to um, forcing setups and actually not being the wrong side of the market, but kind of a little bit more trading price action. And I'm going to try to give you guys some tips on how to actually knowing when it's time to trade and when it's not time to trade. To be clear, with your current level of knowledge, you should not be trading without inducements. So it's either, again, the beautiful example I always give, you have equal highs, you have a beautiful enticement, price induces low, and you trade away, right? That would be a typical entry that we would take. Then, if you decide to take a continuation, that's also not a problem, right? It's very, very, very good. You can take a continuation if it decides to come back here. That's it, okay? Like this, no problem. So even though this entry doesn't really have an inducement, it has been engineered by the one before, right? So you always want to trade away of the inducement if you want to have highly confirmed and easy setups. And remember, some inducements can also be enticements, right? It's kind of confusing, but I'm going to give you a chart example right after. It's very important to understand that you do not want to trade against the last relevant inducement of the day, right? In this case, this is the last relevant inducement of the day, right? And now imagine that we would have like a relevant structural point to the left, right? And this takes this, right? So now this becomes the last relevant inducement of the day, right? This one doesn't mean that this one isn't valid if it's in line with structural expectation, but we're looking at the last one, right? The last one is this one. So now if price starts doing a pullback, right, and does something like this, and then continues, it's completely normal. So you shouldn't be, let's say, taking buys over here, right? That would be most likely either a break even or against the last relevant inducement. But how can you know which one weights more? But it depends on the DPA, of course. But always try to look at structural expectation to give yourself an idea of, okay, where is the last relevant inducement of the day? So let's go and check some charts. An example, I've taken today, today's the 13th of March on US 30. I don't even trade a US 30, but I think it was a clean example. So if you see structural expectation, pretty clear. Right now the market is crying. Very, very easy to understand. As you can see, coming out of Asia, clear sell side liquidity. We don't need to market. We see it. We are professionals. We have our first structural shift. Also, we see it. If this is the first structural shift from the pullback, right? Of course, we're selling the impulse. Sorry, I said pullback. It's only 9, almost 10 p.m. here, and I'm already saying shit. Right? So this would be the IF boss. Okay, because we have more information here, and that would be the SMT. Irrelevant because, as you can see, price comes down and perfectly mitigates the daily low POI. Is this most likely on SMT? Probably, because we're trading from the last relevant inducement, right? That would be the last trade away. Again, I feel like with everything we have, everything that I've given you guys as Confluence's help, strategies and all that, a lot of elements are missing. I don't see too many people talking about tradeaways. Tradeaways is one of my biggest strengths when it comes to trading. This is the last relevant inducement of the day. Now you would say, yeah, but this also induced. Yes, but it's against structural expectations. And this would be the high time frame FBOSS, right? Structural shift, boom, inducement, right? Perfect. Here, this is also a shit POI because they're always reacting at daily lows as SMTs. It's normal, but we don't trade those. We just understand that they're pullbacks. And this is actually the trick. You can, let's say, you see this SMT being induced. You see this POI, this imbalance being filled. You see a reaction. You see your internal break of structure. You see your mitigation. Perfect. The mitigation of the extreme has been done. What we want to do as a first trade of the day, we wait for the decisional. The decisional, unfortunately, just does an internal high here, and we have this beautiful PY. This is something I would take. The problem is until where, right? As you can see, price heads and goes perfectly into this decisional PY, fills the only remaining imbalance, and basically when price starts slowing down, this is where I would most likely take my partials. And this is what you should ask yourself when you're trading and when you should not trade. People see, let's say, an inducement of this and are immediately looking for buys. There is so much time to wait until you actually have a trade, especially as your first trade of the day and so early in the day. Look to the left, look at this, wait for, put an alert here and wait, right? Wait. And what I want to talk about this video is when not to trade. And in this case, even though those buys look nice, for me, I wouldn't trade those because there's no speed and momentum. The inducement is slow. I want speed and momentum. I don't want to be in drawdown. I want my price to leave. I don't want it to be taking a coffee at my entry point. So as you can see, there's kind of speed and momentum here, but it hasn't been fulfilled after, so it's pretty unfortunate. And as you can see, you cannot target those highs. Why? Because remember, this is the impulse. You cannot have a higher time frame expectation target as an intraday play, right? This is the impulse. This would be the pullback. And as you can see, afterwards, it hasn't, this is only internal because this is the complete pullback because it went lower than this point, right? So, oops, right? Oops, God, then what's happening here? No, right? Pretty straightforward. And when you want to look for a trade, and this is why I think I'm so calm, is I know I want speed and momentum. I want manipulation, right? As of now, when it comes down to liquidity, this has been taken, most likely the most relevant one. This one has been taken from the SMT, right? So right now, there's nothing really, nothing. Like you could have liquidity here, but again, even though you have liquidity here, they would become relevant when this low is being made, and it's against structural expectation. So you could put an alert here if you want, no problem. You put an alert here, but you don't expect it to be taken. You just put an alert. If it's taken, it's taken. So that's why it's so important to always put alerts at relevant structural points that are in line with the structural expectation. As you can see here, price does this, does this, does this, does this, does this. Where's the liquidity? Not at this one, because this would be the first break, right? There's no, it's pretty shit, right? The second break would be this one. Where's the relevant liquidity? Here. And look what happens when the market opens, right? Speed and momentum. Look at these candles. Look at these candles. Look at these. This is usually when you see those candles, this is where you lock in. You see these candles pushing, but that's just enticing people to enter, right? And it's reacting from this inducement POI, providing a pullback, right? Because these guys have also seen this as an FBOSS, right? You see it, how it's all together. This would be the FBOSS. This would be overall SMT, but we have liquidity here. So they're enticing people to enter, but at the same time, they are inducing them also. This is where I want to trade. People are out, people are in. This is where I want to trade. And this is where you should go in lower time frame and find an entry opportunity, right? So again, this is something you need to understand, that if you want to enter at the first break, it's your fault, right? Most likely it's barely just reacting to those this liquidity, this structure, whatever. And you want to have that speed and that momentum. And look how this one pushes high. Oh, why is it white? How this one pushes higher and then releases and leaves. It makes it a relevant breaker structure. Fine. This is where you want to get in, right? Perfect. So you go in 5. And look how the candle looks. Do you see how it's so easy? And if example price does this, why is it still white? Okay. Let me just erase this and see if it comes back white. Perfect. And imagine it does this, and just leaves. You miss the trade. Do you see how? And look how they fill this imbalance here. And basically, for me, and this is why I'm so calm when I trade, is because I wait for these types of candles. Let me give you a minute. This. How does this look for you? This one. Look at this. I'm trading live. I see this. I could literally, if I was like up for the day, just do this. Target the overall. What is this clicking here? That's weird. I could literally do this. This is, of course, stupid, but you could. Because when you saw these setups happen so often, it's just so easy. And this is very, very stupid. And this is why you should always take your entry at M1. But you see the idea behind, and overall, if you want to take these inducement trades, you can. You just need to really like cover this high, because you could even say that it's mitigating something here. And this is why I really love taking my time for these entries in M1, as you guys see, because you have basically your sell alert here. It's begging to sell, right? Begging. You go in M1. When the inducement happens, right? That would be here. This is when the inducement happens. At the closure of the 15 minute, or the 5 minute, right? This is done. Look how long you have until you can take an entry. 16 minutes. And even there, you see this, you see the mitigation, you missed it. You missed it. You know you have your relevant breaker structure, you missed it. Just go based on candle closure, right? Go like this and wait for that candle closure, right? This one, I'm talking about this one. When I say candle closure, it's this one here. So realistically, it's very easy to stay out of traps and stay out of stupid trades, because you just want to trade when there's an inducement or away from one. So because I see some people, they see this inducement here, right? They're like, we induce SMT, we're trading away, right? This would be the relevant break of structure. They forget the structural expectation. They forget they're reacting from a daily low here that most likely is a trap also. And they would be taking buys here. And then they would try to target this. Where's the speed and the momentum? Where's the liquidity that has been taken? We're not smart money trap. We're not smart money traders. You cannot trade price action. you want to trade when there's an inducement, right? So let's go check today's GU. It still hasn't TP'd, but I only have right now. I think I only have 5% left. My overall target was here. It hasn't been taken. It's most likely like very, very unfortunate, but it's okay. Let's keep it like it was like this, right? So basically, you have your push lower, right? Price came and induced these liquidity. But are we trading away from this one? Temporarily, yes. What's the structural expectation? See? This is what they need to come back. And this is a daily low. Also not a daily low, but a valid structural point. Remember how you raise those wicks? Those wicks don't exist in my head, right? Those wicks, for me, don't exist in my head. See how it's good when you remove them, right? You can also remove this one. Look how it's good, right? And this becomes actually like almost a swan run trap. Boss, sorry. So as you can see, this speed and momentum. This was so easy. Speed and momentum, right? Price does this. Locking in. I have speed and momentum. Where's the trade opportunity? This is trading away. It's taking this liquidity because we had this point here, right? In line with structural expectation. Against structural expectation, so most likely intraday PA. But this is with structural expectation, right? So as you can see, they push price higher. They come back. This is like an obvious trap. Obvious trap. If you would have taken the buy here, this could have been cool. But since we took liquidity here, it's normal that we have a reaction. And this reaction most likely will make a new structural low. And look, right? You come back here. False reaction again. False reaction. I need to remove this. False reaction of this spawn money thing. And look at those candles. Look at these candles. Look. Boom, boom, boom. Locking in, right? Same thing. Those speed and momentum candles, these ones, they're giving you indications that something is happening. And I think too many people are just trying to trade price action that is actually causing so much harm in your journey. And this is a problem. So let's say you people see structural expectation bullish, right? Bullish. You are in the pullback phase of this structural expectation, right? Taking this internal-ish structure is good. As long as this low is protected, we're still in line with the structural expectation, right? If you erase all this and you go in PA, the expectation is still to make a new high, right? But they can take their time. They don't care, right? They're building intraday liquidity. It's always cool. And now you can see intraday play. You have your sell-side liquidity, right? Very, very clear. This could be your FBOSS, right? This could be your trap zone, right? This trap zone gives a reaction. Where's the last relevant inducement of the day? This one. Is it in line with the intraday, the structural expectation? No. So what would be your overall idea of this pullback target? This low, right? Price decides to do something else. And there's news, right? Do you see, like, look at these candles. 1, 2, you know there's a trade. 1, 2, you know there's a trade. 1, 2, 3, 4, like boom, 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 boom. I don't know if you see my mouse, but like, maybe I should do this. Boom, 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 boom. Look at this. Boom, boom, here, boom. Do you see it? It's mandatory to just get in. And look, these ones, these candles. Boom, boom. Here we go. Boom. Target what? Target the low only, right? There's an opportunity here. Trading the FBOSS. This would be the SMT. This would be the SMT here, right? But there's a reaction. And look how the reaction is taken after. How the high is perfectly taken after, right? Taken, right? Where is the inducement now? This is the last relevant inducement of the day, right? But what are we always also doing? We've taken these points, right? Speed and momentum, candle, boom, pushes. Do we have a trade opportunity? No. Do we lock in? Yes. Where would be the idea to go? We don't know. Maybe it wants to take this, right? Maybe it wants to take this. It can do it, as long as it doesn't take this point here. So the real moral of this video, when you guys are trading, I sense so much kind of forced setups that you should not even look at anything other than when there's vector candles. When there's speed and momentum, something is happening. They're either enticing people to enter, or they're either taking liquidity, like these guys. Boom, 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 right? And every single PA, like a speed and momentum candle, right? Let's say there's this candle like this, and it pushes fast, doesn't mean this candle like barely going higher. It drops low, boom, 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 boom. If we don't take liquidity to the left, then you shouldn't be expecting a trade away. If we're actually just creating, let me just move this shit here. If this would be like a structure, actually, like let's say this would be a structure, and this is an enticement zone, then you shouldn't expect a pullback. Do you understand? Like this one, right? This one entices, but also induces all these equal lows. So this is why it's so easy for me to just know when to be in and out, because I see these candles. When I see vector candles, this is where I'm interested, right? Very, very straightforward. Super easy. So again, you cannot expect to have a vector candle and have a setup. I don't mean this. And look at this thing, right? We see this downwards PA, structural expectation, very, very clear, right? We have made this new low, but this would be internal, remember, because this one is here. This one hasn't made a new low from this one, so this is internal, but this is external. So this is the external structure, but they can do whatever they want until they take this new low. So what I did is I took a trade based on the structural expectation, expecting price to go lower. But remember, we took also liquidity, and this is an inducement POI. And remember, I told you guys I'm taking my partials here, took 80%, because this is also an inducement POI. Look at the speed and the momentum. Look at for me, it was an FBOSS, right? But it ended up being a relevant breaker structure. But the trade is the same, because I take the actual relevant breaker structure trade into the mitigation. This is why I close here. And then we have that trade away. But the trade away is this. This is the last relevant trade away of the day. We have also liquidity here. This is an inducement, but which one weights more? This little shit or this little thing, this big thing? This is where, when we have speed and momentum, we ask ourselves these questions. Look at this speed, boom, 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 into the mitigation. Easy, partials, close it, easy, easy work. So when it comes down to asking yourself a question is it time to trade or no? The question is, where is the last relevant inducement of the day? And what are your vector candles? What are they doing? As you can see, this vector candle actually entices them to enter as breakout traders. So we have this here, right? Very, very clear. Oops. And then we have vector candles coming down. What are they're doing here? We look to the left. Oh, we take a relevant structural point. This structure has made a significant high. So even though we're against the structural expectation, if we would take buys, we wouldn't expect to take this target, right? Maybe more intraday, or maybe like internal here or here or here, right? I don't care. But then this is now the most relevant inducement of the day. Very, very simple, right? So you know that you need to trade with this. When price pushes higher, speed and momentum, these candles, like I was in this trade. When I see speed and momentum like this, the only thing I target is this, right? I didn't take this buy, but this, if I was, reverse trading strategy, it's this. And then I see a reaction in the M5, right? So most likely this is an order flow entry for SMC. So it's most likely a trap. And as you can have a confirmation here, we're trading away from this point here, right? This is the last relevant inducement of the day. We have speed and momentum, candles. I'm preparing for what? Taking a buy? Good. Until where? Where's the next relevant liquidity? This. That would be a what? 1 to 2, 1 to 1, 1 to 184. It's bullshit. So what I do, I put my alerts here. Price happens, boom, boom, done. Right? These vector candles. This is like literally a more advanced entry because I know that there's nothing else that makes sense to take. Like look at the M5. That's the only structural point. So it's normal to have a reaction. Right? Very, very simple trade. But now, this is the temporarily relevant trade away. Why? Because it's not only a trade away, it's also labeled as a relevant breakout structure or an M-boss. We don't know yet, right? So basically, this is inducing something. This is also inducing something, but it's acting as something else. So you would target the imbalance fill, right? Speed and momentum. I go into the M1. I look what's happening. Okay. Look what this. Oh. Look at this. Price is loading. And you close when you arrive at this thing. You never want to stay in these trades when there's speed and momentum. Look, speed and momentum right now. Speed and momentum. Do I have something? Oh, see? So this speed and momentum is actually, again, trading in line. So it's not because we have speed and momentum that we have a trade. This speed and momentum is trading away from this zone. So now the newest established last relevant trade away from the day is this one. And this one is in line with the bigger picture than this one. So you shouldn't expect the price to just react from this zone, right? And here we go. Look how they trap this. Why is this a potential SMT? Because we're trading away from this liquidity. So basically, it's very, very easy. You should just look at candles. Like, you should not do nothing else than look at candles. So look at this. It's very, very simple. It's always the same thing. Price is enticing people in, right? We have relevant stop losses here. Let me just drink some water, sorry. You have vector candles. You lock in, you look what's on the left. We have multiple structural points with most likely equal lows. I'm sorry, my voice. It's acting up. I talk too much. I'm losing my voice. Very sorry, guys. My voice sounds wrong. All right. So that's a perfect inducement of those equal lows, right? Have these equal lows made a significant high? No. Have these equal, and you need to focus now. Have these equal lows actually are in line with the overall structural expectation? No, right? No, right? So should we expect from these vector candles inducing, should we expect price to go here? I'll give you a couple of seconds to think. The answer is we do not know. Price pushes vector candles again. I would put another tier. I would see price would mitigate this, right? See, I would see price would mitigate this, like this. It would make a significant low like this. And as you can see, this is where I would be looking for entries, right? And it comes back into the decisional zone, right? Pretty big. I think we can have a low justification. I don't think so. I think it went a little bit higher. No. Yeah, that's a little bit unfortunate. But you still have this one, like from this potential SMT, even though you think it's an inducement PY because it has induced this. But remember, you need to ask yourself all the freaking questions. And you have this one here, maybe, to continue to target what? Only this low, nothing else. Nothing else. So I think that when it comes down to trading, you just need to focus when there's a candle pushing into one direction. What is this candle doing? This candle is taking these equal highs. Perfect. What are we expecting for it? A reaction. Are we trading it? We don't have to trade it, but we understand there's a reaction. Where should this reaction go? Here. Expectation is here. Why? To do a potential false reaction, right? To do a potential FBOS, right? We could maybe do like a little FBOS and continue lower. It doesn't happen. You need to adapt, right? But don't expect that there's an inducement to take a buy here because this is against what we're seeing. So I think these are the main issues of the group is people are not trading inducements. They're trading PA and people are not asking themselves questions. And this can be a killer because if you see these as equal lows, right? Perfect. I have no problem. You want to take a buy here. If there's an opportunity, you take a buy here. I have no problem, right? And then you would target this one. I have no problem either. But take your then partials at this potential mitigation, right? Because we don't know if price will just hold this point. And then look at these and look at the speed and momentum, giving it away. Speed and momentum into the POY. Remember, speed and momentum into a POY most likely will have a reaction. So take your partials. Are we trading against liquidity? Yes. Away. We're trading away from this inducement. Well, ask yourself these questions. Where is the actual positioning yourself, the position you are in the leg, right? Are we in the pullback or in the impulse? Right now, we are in the pullback phase, trading into the impulse. I just want to tell you guys, do not get involved into trading without candles pushing into one direction. You will save up so much freaking headache just by trading freaking vector candles, right? See these vector candles pushing lower. They push lower. What have we taken? Nothing, right? Maybe mitigating this point. So should you be looking for buys here? No. Okay. Now you just wait. You have this mitigation of this point here. It gives a reaction. And look, the vector candles. It's pushing in it, right? It's pushing in it. Are we trading away from this some liquidity? No. We have a reaction. It induces higher perfectly. Again with vector candles. And here we go. Here we go. Here we go. Trading the inducement POI of the FBOS. Where should be your target be? This point here, right? And it actually melts to the dim floor. And those perfectly taking this point here, right? If we look at structural expectation, we are still respecting the structural expectation, right? These ones have made new lows, but maybe this is the pullback of the overall trend. We do not know. So when it's time to trade or not to trade, you will entirely know when it's time. And if you're like me and you trade New York and you wake up and you see this, skip the day. There's vector candles. Okay, there's a structural point here, but you need to see the reaction of that structural point, right? You want to have a reaction. And there's not enough evidence like GU that actually has had the SMT play here, giving a false reaction, a significant false reaction, and inducing lower to trade away, okay? So I hope this clears some light bulbs, actually helps you identifying that maybe you have been doing these little bit of those, I'm going to be taking some mitigation here along the way and trading like this, and I'm doing this and this, but here, even though I understand that you do this, but where is your inducement? Where is the last relevant inducement of the day, right? Are you close to it? Is there something significant? And if you miss this opportunity, you need to see something happening in the market. And the only moment something happens, it's here. These candle pushing. For me, I'm locked in. It's not, I want to take a trade. If there's relevant liquidity to the left, like imagine there's multiple equal lows and we have this candle here. Now I'm going to take a trade. If I'm in the middle of nowhere and there's candles, it's just I'm locking in. I'm waiting. I'm not looking for buys. I'm not looking for sells. I'm putting an alert here and here. I'm just waiting. But I'm locked in. I know something is about to happen because of those vector candles. And this is the key. You want to have speed and momentum. You know something will happen when there's speed and momentum. Right? Speed and momentum. Something's happening. See? So when to trade or not to trade, the answer is you need to have proper inducement or enticement to be interested. If there's no speed and momentum, just don't waste your money. You can do this, but it's not what I do personally. And this is why most of my trades are not in drawdown, because I'm really taking the impulse of these manipulation. If they push a price to relevant liquidity, it's to take it and just reverse it, right? It's not to continue to one direction. If these are in line with the structural expectation and they're inducing buyers, then those vector candles don't make sense. But if they buy, and speed and momentum, they come here, induce relevant liquidity, also FBOS, and then leave, this is why I'm interested, because of those vector candles creating this FBOS, taking the stop losses also, and we're still trading in line with the structural expectation. So the vector candles need to make sense. So use your head, be smart, be disciplined. Remember, motivation is what made you start trading. Discipline is what will make you continue trading. If you want to make money in the market, if you want financial freedom, if you want to travel the world, if you want to bless your loved ones, retire your family, you have to put in the work. And if you think that trading is just as easy as, oh, we have vector candles, I'm just going to take a buy, without asking yourself proper question and really strategically thinking about what they're doing, you're not going nowhere. You're just basically just switching lines without doing your blind spot verification. So I hope you guys enjoyed this call. 40 minutes, a little bit longer than I thought, but I had to say this. I'm here to help you. So please let me know if you need anything, and I'll catch you all in Discord. Peace.